or names, they still offer decent risk-reward ratio. To discuss that, let's connect with Ajay Bodke, Head of Investment Strategy with Prabhudas Lilladher. Ajay, good morning and thank you for joining us. Let's first address the moot point, and the moot point clearly is auto dispatch numbers. For the month of August, auto dispatch numbers have been very impressive. What does that indicate? How should one read into that?
I think the numbers that have come out of especially Maruti numbers indicate that the cyclical recovery clearly has kicked in, and I think over the next 6 to 9 months, as the inflation starts coming off as per the trajectory that RBI has set in, I think the market will start building in towards the fag end of the current financial year a rate cut, and it will and at the same time aggregate demand in case of investment cycle should start picking in the by the fag end of the current financial year. So I think we are well on course of a cyclical recovery, and one should position one's portfolio in terms of a judicious mix of good quality cyclicals as well as also some defensive names, because the US economy is picking up steam and the global economy is also in an up move.
What is it that you're sensing right now, though, about which way the market is headed? We are rather at the top, Ajay, right now at 8,000. Does it seem like the market has a fair chance of consolidating somewhat or correcting a little bit from these levels, or does it seem like it's going to be another, 100, 200 point rally that we have in store?
I would err on the side of caution, because the market is at all-time high. At the same time, the momentum seems to be going great guns. On the valuations front, as you touched, I think we are estimating 495 rupees of earnings for Nifty a year from today. So at the current level of around 8,000 odd, we are trading at roughly 16.1 times 1 year forward earnings, vis-a-vis 14.8 times 1 year forward earnings for Nifty if we go back and look at the last 10-year average. So we are trading currently at around 9% premium to last 10 years average. Although I must point out that the earnings that we are looking at, we are at the bottom of the earnings cycle. And as the cyclical recovery picks up steam towards the end of the current financial year, one could expect a sharp jump in earnings for FY16. And hence I would not be too worried about this 9% premium that I mentioned. I think the market should be on an up move, but it would be a tepid and a measured move from here on in the market in the short term. What really is helping us is the fact that the diesel under recoveries have come down to 8 paisa per litre. We are on the anvil of diesel being the diesel like petrol will clearly see being deregulated. The current account deficit has come down sharply to just 1.7% of GDP in the first quarter. Trade deficit is down sharply by 31.4% in the first quarter. And I think the stabilization on the external front, crude prices coming off, macroeconomy stabilizing, fiscal deficit being under control, and a strong government giving push to infrastructure sector. All this is the confluence of all these factors will keep India as the darling among emerging markets, and the other emerging markets are also suffering from caving in of demand from China. So I think for the next 3 to 5 years we are in for a very strong up move, but one must be selective in one's choosing of stocks.
Ajay, for the longest time we have not seen a sizable correction in global markets. Global volatility as we speak is at a multi-month low. Do you think the biggest risk for this market is not local, it is global? And if globally things destabilize, that could usher in a big correction?
I think you have put your finger on the pulse, Nikunj. I think the two biggest worries that could possibly emerge and could create turbulence in the global markets is in case the geopolitical situation, where there are multiple theaters in which today we are seeing a flare-up, be it Iraq, Syria, be it Ukraine, Russia, or be it Gaza, Israel, where there has been some semblance of sanity over the last few days. But any flare-up in the tension, and also in East Asia, let's not forget that there is a brewing tension between China on the one hand and Philippines, Japan, South Korea and Indonesia on the other. So I think we'll need to keep a very close watch on how these geopolitical tensions lead to, in case there's a flare-up, what kind of equity risk premia, or in the case of oil, I think what kind of increase in risk premium which could impact the global asset flows. The second concern as I see a slowing China sort of leading to problems in aggregate demand for some of the emerging markets that supply to China. So I think these are, and plus the tapering, although the market has discounted the fact that the US economy is on a strong upswing, but the pace of increase in interest rates in US, which is expected to start from first quarter of next calendar year, what is the pace at which the interest rates are ratcheted up will also determine the global asset flows. And that sort of are the two things that the markets need to keep a very close watch on, Nikunj.
Okay, Ajay, stay on with that thought. Lots more to chat about with you. For now, we're going to take a very quick break, come back and get to some more trading strategies. And of course, the pre-open rates this Tuesday morning.
सर संगीत फाइनेंस का पैट 100 करोड़ ऊपर है।
सॉलिड है सर।
उसका एनपीए भी उतना ही ऊपर है। रीड केयरफुली।
हाँ सर ये नई पॉलिसी से इंफ्रा स्टॉक्स पे कुछ असर नहीं पड़ेगा ना?
नहीं, इट विल बी अ गेम चेंजर।
हाँ सर।
You always wanted to invest in stocks, but never knew where to start. Kotak Securities, the best broker in India, gives you the knowledge and technology to trade confidently.
सर पैंट्रोनिक्स का P22 पर है सर। स्क्रिप्ट महंगा लग रहा है ना?
सर वो तो उसका ट्रेलिंग पीई है, उसका फॉरवर्ड पीई सिर्फ 14 पर है। इसमें ग्रोथ बाकी है मेरे दोस्त। आई एग्री। सर खरीद लिया at 440। गुड। कम लेट्स गो।
हाँ सर।
Forever new. Greenply Plywood.
Breaking news! For the first time in India, a sneak preview of this biggest business carnival from 4th to 6th September, Pragati Maidan, New Delhi.
The world's largest exchange, BSE. Experience the new.
गोवा की मस्ती या दुबई की शॉपिंग, चूज करना है मुश्किल फ्रॉम बेस्ट होटल डील्स अक्रॉस द वर्ल्ड। कॉल करें 186050099191 और विजिट hotels.com।
Right, welcome back. Let's go to Mitesh for some trading ideas. Mitesh, how do you propose one should trade today?
I have buy calls. The first one is a buy on Grasim, which managed to get past the important supply zone of 34.50-55. So that's a buy with a stop below 34.40. Look for trading upside to continue to about levels of 35.50. Ashok Leyland closed on a fresh high beyond the earlier highs of 38.5. So that's a buy with a stop below 37.75. Look for a slightly positioning target in excess of 41 over here. Bank Nifty gave a fresh breakout. That's a buy with a stop below 15,850 for targets of 16,500. Federal Bank is a buy with a stop below 122 for targets of 131. And I've got a buy on IOC, which has been a recommendation earlier as well. So that's a fresh buy with a stop below 370. Look for targets of around 402.
Ajay, for the moment it appears that domestic institutional investors are back in business and retail investors are back and they are really investing in equities again. So the fact that Indian retail is back, what does that mean for individual stocks? And are there any stocks which one should buy with the assumption that domestic institutional investors or retail investors would back them?
I think this is a very seminal development because over the last many years, it is the FII's money that has essentially been propping up the market. But today you are seeing that both the domestic institutions, be it the mutual funds, insurance companies, and also the retail investors, for the first time over the last 9 to 12 months, have started evincing interest in the equities. They are coming back. Initially, albeit cautiously, but now we are seeing increasing participation, and this bodes extremely well from the market's perspective. I'll certainly be looking at recommending 3 or 4 stocks with a medium-term perspective across sectors. I think in the capital goods sector, as I said, I think as the investment cycle starts kicking in, one should look at stocks like Cummins India. We are looking at a 1-year target price of 765 rupees in Cummins India. It's essentially the stock is we are looking at a revenue growth of around 11% in the current financial year, followed by 18% in next financial year. In case of earnings, we are penciling in 16% growth in earnings in this year, Nikunj, followed by 22% in Cummins India in next financial year. Company has a very strong ROE of around 28% and is trading at 22 times 1-year forward earnings. In agrochemical sector, we are very positive on 2 stocks, UPL as well as Tata Chemicals. In UPL, we are looking at a 1-year target of around 400 rupees. There we are penciling in a CAGR of 12% growth in earnings for between FY 15-16 and earnings growth of 15% in this year, followed by around 18% in next financial year. And again, we are expecting there strong ROEs of around 21 to 22% in the current year and next year, with the stock trading at just 9.8 times FY 16 earnings. Tata Chem is another turnaround story, we believe. Strong management. There we are expecting a target price of 430 rupees a year from now, and that is predicated on around 6% growth in top line in FY 16, 22% growth in bottom line in FY 16, and the stock is trading at around 11.2 times 1-year forward earnings.
Ajay,
KPIT is the 4th stock.
Yeah. What did you make of the Supreme Court's comments yesterday in the coal case? Of course, that they've set aside another date for the final hearing now, September 9th, but they've asked the government to file an affidavit to list out the operational coal blocks and government and minor groups to submit suggestions as well. Does it seem like one could see a harsh outcome and it may be something more than just a penalty?
I think it's very difficult to read what is in the mind of the judges. But at the same time, I think the fact that after declaring the coal block allocation illegal, the Supreme Court did not deallocate them, unlike in the 2G case, clearly is an indicator that the Supreme Court is fully cognizant of the stakes involved of bankers, investors, and multiple stakeholders. And the setback, or the immense setback, any wholesale deallocation could cause to an incipient economic recovery. So I think the Apex Court has taken a very measured, a very calibrated view. And even yesterday, I think when the AG made a submission, I think the Supreme Court has asked them to file an affidavit. And we basically are hoping that the 295 rupees per ton penalty that has been suggested by the AG from the start of the date of mining for those 46 blocks, 40 operational, downstream units operational, 6 where downstream units are going to be operational very soon, and where PPAs have not been signed. I think if it is accepted in toto by the Supreme Court, and even if it were to deallocate the other blocks, I think the gloom and doom scenarios that had been built in by the market in case of some of the metal stocks clearly is uncalled for, and it would be a good middle of the road approach that the Supreme Court possibly could take if it were to go by the suggestion of the Honorable Attorney General.
Well, Edelweiss has come out with a report this morning, and they're saying that if the penalty of 295 rupees per ton is allocated from day of inception, that will have impact of about 15-16% on the projected EPS of JSPL. So Ajay, does it make sense to be a contra buyer in JSPL? Like you said, that markets were pricing in a doomsday scenario, and that scenario is unlikely to pan out.
Yes, because Nikunj, when the first judgment came in, people sort of went to the other extreme and started talking about if the companies had to import the coal, then what would be the valuation that one can ascribe to these companies? If the companies were to buy in e-auction, what would the valuations be? The worst case and not so worst case scenarios. But I think the AG's suggestion clearly is suggestive that I think the scenario that could unfold if the Supreme Court were to accept his suggestion is nowhere near the worst case scenario that the market had built in. So I would sort of would be not so negative if I were to take a slightly longer term view in case of the companies that have been affected due to this judgment, and I won't be too negative on these companies. I would certainly be looking at adding them on dips with a medium term perspective.
What is driving names like PTC India and PTC Financials?
Well, unfortunately, I won't be able to comment because we don't cover the stocks, neither of them.
So, within the power finance space, what do you like?
Sorry, I couldn't hear the. Sorry,
the power
repeat the question.
The power financiers. Do you like anything from that clan, from that group?
Yeah. So I think in financials in general, I think we are essentially betting on State Bank of India. We don't as well as sort of Bank of Baroda, but at lower levels. And in case of private sector banks, our preference continues to remain with Axis Bank and HDFC Bank.
Why HDFC Bank? Because HDFC Bank is no longer growing at its historical run rate. You know the flavor of my question, but looks like your answer is also ready.
I know. Yeah, so essentially I think, if you look at last couple of months, HDFC Bank has been an underperformer vis-a-vis both private sector banks as well as some of the leading public sector banks. But essentially it is because of the overhang that the FIPB issue is having on sort of the trajectory, the stock market, the stock trajectory. And we are hopeful that I think in the next meeting, if the FIPB were to deliberate and approve the bank's proposal of sort of increase in FDI limits, then I think all the pent-up demand in the HDFC Bank, which has been waiting in the sidelines as per our interaction with a lot of foreign institutional investors, I think will come to the fore, and one will clearly see a sharp step up increase in the stock price. There has been a tad slowdown in growth, but then if you look at the numbers that we have penciled in, we are still expecting 22% growth in revenues in the current financial year, 18% next financial year in HDFC Bank, and bottom line 24.4% growth this year and 24% growth in next financial year. The bank has very strong ROEs of around 23% projected in the current financial year, and we trading at 15.5 times 1 year forward earnings. So we think that in 1 year from now, 925 to 950 clearly looks to be an achievable price in case of HDFC Bank. It could also sort of, if the FIPB approval were to come in, it could be achieved earlier than the time period that I just mentioned.
Ajay, of late one has seen outperformance from the agri, specialty chemicals, mid-cap pharmaceuticals, and even to some degree the textile names have shot up a fair bit when it comes to the mid-cap end of the market. What is your own sense? Where are we likely to see outperformance from the mid-cap pockets?
I think our preference continues to remain with some of the mid-cap capital goods engineering names, which had seen a fair amount of up move, but then I think over the last month or two, I think there has been some sort of sideways movement there. I mentioned in detail about Cummins India, where we are expecting a sharp turnaround in the next couple of years. I think there are two other names in mid-cap in mid-cap capital goods space where we are positive. One is Thermax and the other is Crompton Greaves. In agro names, I mentioned UPL and Tata Chemicals. PI Industries is another name where we are very positive on. Although the stock has moved up very sharply in the short term, it might consolidate at the current levels. But I think in the medium term, it could turn out to be a very good bet. We are expecting a growth of 20% in top line in PI this year, 22% in next financial year, earnings growth of 30% CAGR in FY 15-16, and ROE, strong ROE of around 31% this year and next year, and the stock is trading at around 20 times 1 year forward earnings. KPIT is another company where we are very positive on. We are expecting a 1 year target price of around 200 in KPIT. Again on the back of revenue growth of around 14% in next financial year, 26% earnings growth in next financial year, ROE is of around 22%, and the stock is trading at only 8.5 times 1 year forward earnings.
Okay, let's slip into a very quick break. Then on that note, when we come back, the pre-open rates this Tuesday morning also bring on board Jiten Sriram from HSBC Securities and Arvind Sethi from Tata Asset Management.
India, given its demographics, is